Hey everyone, it's Matt Donaghue with Mission Financial Planners, and this is your weekly update for the week ending on Halloween, October 31st. This week, from a Stoicism standpoint, Marcus Aurelius is going to remind you that hardship can be medicine. I think we've all experienced something at some point in our lives where something that really seemed to be a bad thing at the time had a silver lining at least, and we were able to grow and become hopefully a better person as a result of it. Marcus Aurelius uses a doctor's analogy to do it. So our theme this week is going to be a little bit, medicine related, but, essentially, when you go to the doctor and they tell you to do something, generally you do it. But when something happens in life, sometimes we procrastinate, we resist it. And, physical and financial burdens or problems or pain, they're part of the same cure. Once you get through it, you can handle it and you can move on to something stronger. Getting into the markets, market volatility, inflation, career setbacks. Yeah, they do feel like something went wrong, but often they're just part of an adjustment process. The Federal Reserve trimmed rates by 25 basis points last week, and consumer confidence ticked up to 94.6. The economy, think of it as a big patient, is still breathing steadily, but the bigger shot in the arm comes from the One Big Beautiful Bill Act, which made tax changes retroactive. The IRS expects record high refunds next year, roughly $39.50 for up to 65% of Americans. That's a strong dose of stimulus for a potentially slowing economy. But like any medication, dosage matters. Too much of it, we can reignite inflation. So while the Fed watches the vitals, investors should stay focused on their own treatment plan. Diversify, rebalance, and keep their portfolios aligned with long-term goals, not emotional reactions. Shifting gears to taxes, tax planning is also preventative medicine. You really shouldn't wait until April to start caring about your taxes, especially if you're a business owner or a self-employed professional. Proactive tax planning for you is how you keep financially fit. Your records need to be clean. You need to separate your business and your personal accounts. You need to track quarterly payments. And when you stay disciplined with this stuff, you're not reacting to something that comes along. You're managing a process and you're managing your business. Taxes are like one of those illnesses that get worse the longer they're ignored. If you address them early and adjust them often, you'll find that the financial clarity you can get really feels like a lot of peace of mind. There's one other critical checkup too many people skip, and that is extended care planning. You may be more familiar with the term long-term care. We call it extended care planning because that type of planning is really all about protecting your family from the emotional and physical and financial strain that comes along with caregiving for a frail older adult. Caregiving is love in action, but it will drain the health, it can drain the hope, it can drain the savings of the people who are providing the care. And that's why it belongs squarely in our insurance pillar of the 5 pillars of financial freedom. Extended care planning does not just protect your savings, it protects your family's well-being as well. But remember, the plan only works if it's funded. We see this a lot in estate planning. We also see it a lot in terms of extended care planning. A lot of people recognize that, this could be a potential problem for my family, but their action stops at the conversation and they never take the steps it takes to fund a plan. Funding your extended care plan is the difference between burden and blessing, between your family scrambling and your family being supported. Every piece of your financial life connects. They're like systems in the body. The income planning keeps the financial heart beating. Investment management keeps the opportunities flowing. The insurance planning protects you from shocks. Tax planning helps manage that financial metabolism, and estate planning keeps your legacy's DNA intact. Ignore one of these, and the others have to work really hard to compensate. Together, the 5 pillars form your long-term prescription for financial wellness. Following them doesn't mean life gets easier. It just means you're ready for whatever life prescribes next. Volatility, hey, it's routine. It's not a ruin. A tax bill is a line item. It's not a crisis. And even illness or aging becomes something you face with clarity instead of chaos. Seneca once said, disease is an impediment to the body, not the will. Markets, taxes, health, they all test the body, but they don't test your resolve. The real question is whether you'll keep following the doctor's orders when the medicine burns a little. At Mission Financial Planners, that's what we help you build, a financial immune system that can take the hit and keep going. So as we move into the final stretch of 2025, trust the treatment, review your plan, fund your extended care plan, because the best time to follow the doctor's orders is before the symptoms show up. Read the 5 Pillars of Financial Freedom on Amazon, or schedule a consultation with us. Just go to our website, missionfinancialplanners.com. Your future self will thank you for sticking with the plan. Thanks, everyone. Have a great week, and we will see you next week. Bye.